the first thing we have to recognize is that this will be the year, and probably in the first quarter, where the Fed stops raising rates. No one should expect them to cut rates. They're going to be very, very hesitant to do so because inflation is still well above that 2% level. But at least the markets will get jittery and excited for that aspect. And I think that'll be a short-term catalyst if we get that word from the Fed that they're finally done raising. The next thing that I think is going to be a tremendous kind of shock to the market is that we are going to slip into a recession in 2023, and it's going to actually turn out to be a very rough recession, right? We obviously know that past recessions since 2009, the Fed has come out, printed money. They can't do it this year. So there's going to be a point later this year, probably in the third quarter or fourth quarter, where the market and investors are going to say, uh-oh, if the Fed won't save us, how do we get out of this recession? We don't know how. We don't know. We're like it's like the parent and the child. The parent always saves the kids. When the parent leaves, what happens to them?
In this video, Gareth Soloway highlights the volatility in 2023 as compared to previous year. An accompanying chart of Bitcoin average one-month realized volatility distribution came with a description of Bitcoin being deep in a bear market. 2022 was a rough year for crypto as more than $1.3 trillion was wiped off the value of the market. And Bitcoin, the world's largest digital coin, saw its price slump more than 60%. Investors were caught off guard by a wave of collapses in the industry, from stablecoin project Terra USD to crypto exchange FTX, as well as a worsening macroeconomic climate. With inflation rate expectations triggering the initial decline, the fundamental backdrop remains key for price action in 2023. Looking ahead to 2023, crypto industry experts expect more difficulties ahead for investors as rising interest rates continue to weigh on risk asset prices. Those who made predictions about Bitcoin's price in the past year really missed the mark. While markets await the first Wall Street trading day of 2023, the US dollar index is already struggling in what could be the year's first silver lining for crypto assets.
I think this is the year where the S&P actually dips and takes out, not only hits the pre-COVID high, but actually retraces to a key trend line. I'm going to show my chart right here because I think it's really worth taking a look. So this is my S&P 500 chart. Today, we are seeing a nice little down day. There is a bearish pattern formation here, so that does dictate further downside over the next week or two. But really what I'm expecting is a move probably within the January or February month to 3,400 on the S&P. And then obviously after that gets a bounce, you'll be looking at this long-term trend line. Take a look at this trend line. It goes all the way back to 2009. Connects through these lows. Here was your COVID pierce. That just panic was just insane there. But this is probably where we're headed. So we're looking at a 3,000, at least I'm looking at a $3,000 target on the S&P 500 this year alone in 2023. And then let's not forget about crypto. I mean, crypto probably bottoms this year, but it's going to be a very volatile yield. You're going to have some pops in crypto. You're going to have some dips. You will probably hear about regulation in 2023 as well. And I think that's going to really send the market into kind of a tizzy in the near term. Yeah, I think probably not in Q1, but I think Q2 to maybe mid-year, early Q3. I think that's where it's headed. Yeah. And then I ultimately think we'll probably end up in a period where we're below trend, right? So if you think about it, there's a name for the line, which is a trend line, which tells you where the trend has been. And we've been above the line for such a long time, ever since 2009, when the Fed started printing money. And so the idea is that if you're above for a long period of time, it makes sense that you could be below to even it out and be below for a significant amount of time. So even though for my year target, I'm kind of looking at that 3,000 level, I think over the longer term, the next couple years, we actually could go below that level. It could be a pretty nasty.
2022, crypto delivered its worst performance since 2018, but investors are hoping 2023 will usher in a repeat of the 2019 market rebound. Bitcoin will recover to $30,000 in 2023, but warns it could remain in the $10,000 to $20,000 range in the first quarter of this year. Standard Chartered has cautioned investors that crypto winter will extend into 2023, leading to more liquidity issues and bankruptcies, as well as further deterioration of investor confidence. Standard Chartered says Bitcoin prices could fall another 70% to around $5,000 in 2023.
Rate hike. I don't know if they're going to do another 25 and then be done, or another couple 25s, but I do think that the economy significantly weakens in 2023. We're seeing the loan default spike. I mean, the signals are there that it's coming. It's almost like you see that tidal wave out in the ocean and you're like, holy crap, but you still have a little time before it hits you. But then it's going to get close here in 2023 and actually hit land. And I also think it's important to recognize that investors, like you said, most investors, most retail investors came in around COVID, right? There was that big asset run. The Fed was printing the money. They finally got lured back in the market. And so they haven't experienced a long bear market like we saw from the tech.com bubble, right? And the tech.com bubble collapsed. We saw 15 years before the NASDAQ made a new high. And the only reason I'm saying that could be the reality of the situation is because you're losing the main driving force for the longest bull market that we've ever had in history, which was printing money. And so you have to say, unless they're going to somehow start printing money again, it's probably going to be a long time before we see new all-time highs.
The digital asset ecosystem is still a nascent industry, and it will continue to develop in 2023. Dollar index is already struggling in what could be the year's first silver lining for crypto assets. Crypto exchange Bitbank projects Bitcoin prices will recover to between $20,000 and $50,000 in the second half of 2023, but only if the Federal Reserve can stop interest rate hikes by mid-2023 and begin cutting rates by early 2024. Markets await the first Wall Street trading day of 2023. While the market may likely test new lows in early 2023, we should see a rebound to the $20,000 mark as the year goes by. The Economist also highlighted the next Bitcoin halving in May 2024 as a potential bull market catalyst as it coincides with the macroeconomic cycle.
So there's two things that could trigger the Fed to start printing or lowering rates. One would be, needless to say, some sort of massive recession or depression, or it could just be the fact that inflation gets down to 2%. And right now, the Fed is like, oh, it's got to go to 2%. But that's a moving target. Let's be fair. Like if we got in a Great Depression like type scenario, they're not going to be like, oh, we're at 2.1%. We can't cut rates. I mean, or print money. They're going to do it when you have unemployment skyrocketing. So I think the key is, though, investors need to understand it's going to have to be a shock to the economy to get them off of the bench, essentially. And that's not going to happen in the first year. It's not going to happen in 2022. There's a chance if things get worse, or excuse me, in 2023, there's a chance it could happen in 2024. But I honestly am in the camp that I don't think we see new all-time highs in the S&P for 10 to 15 years.
What are your thoughts about investing in Bitcoin in the year 2023? What do you predict? Either Bitcoin will go down further or gain a rise? Feel free to let us know in the comments section below. I hope you find this video more interesting and informative. Don't forget to subscribe to our channel and give this video a big thumb up. See you in the next video.